Thanks everyone for coming to my first webinar. I want to make sure you guys get as much out of it as possible, so please feel free to email us any questions that you want to see covered on future webinars. And if you have any questions during any of the presentation, please feel free to send them over in the chat box, and I'll be having a Q&A at the end of the webinar and go through all your questions. So today I wanted to give you an update of what's happening in our real estate market and what I expect to happen in 2021, sort of our predictions, up and coming opportunities that we have in our pipeline for our investors, and then getting to your question. For the majority of people trading in real estate, when COVID hit, it wasn't a priority. So unless you were in a position where you just bought a house and you had to sell, you were moving, or you lost your job, or something of that nature, unless you were in a position where you had to sell, you really were putting your life on pause to kind of figure out what's going on in the world. We've never experienced anything like this. Before I go on and spend a whole bunch of money on a new property, do I still have a job? Am I going to be making money? All very natural concerns that people had. So our real estate market essentially paused, which is completely understandable. And at the start of the year was, set to be a record-breaking year. So all of our fundamentals were very, very good. So having the pandemic underway, obviously we didn't have any students in school in any of the university and colleges in the city. So that left 6,000 apartments that were normally tied up in a heartbeat vacant. And those apartments, smaller apartments, are typically what first-time home buyers or students would rent. So that really created a glut of those types of units being available. Now, in addition to that, if you were following the City of Toronto ruling against Airbnb, they essentially made Airbnb almost completely illegal. You can still do it, but you have to rent it out for so long that it basically makes it completely not an option for 99% of the people who are doing it. So we did have several buildings in the city that did allow it, who had no vacancy, and now having that compounding effect where those units have to be absorbed, and there are a building where perhaps there was no inventory whatsoever now has 100 units available. That, combined with the fact that we had no students in university and school, added downward pressure on rents, causing rents to drop. That also encouraged some investors or people who own to sell because they wanted to take their money out, and that put downward pressure on pricing. While this is all going on, our housing market, while this is specific to condominiums, our housing market is still doing quite well. If you read or heard about any of the reports how our Toronto market actually, all the national prices are up and, it's still breaking records, that's because they're amalgamating a whole bunch of different statistics all into one and, saying that the market is up. So in fact, if you are an investor in the Toronto real estate market, you are not up. But what was up was things like, during a pandemic, people wanted to leave the city, they wanted more space. So we saw, cottage country values grow. We saw the 905 grow. We saw larger properties grow because that's what people wanted. What people didn't want was to be tied up in a small space when there's nothing to do, right? So when you live downtown, the majority of the lifestyle is going out and doing things, being able to live that sort of life. So when none of those amenities are available to you, the natural thought process is, let me find some more space. So that's what we saw happen. We saw condominium prices and downtown prices go down, vacancy rates go up, while almost all other sectors really did quite well and saw increases. So in July and August, you may remember that that's when Toronto announced going into phase 2 and phase 3. And we saw a huge boom in 2 months that are traditionally very slow in the year because there are summer months. It's typically not months where you have a lot of activity. During those 2 months, you had sales really grow, and basically everything that came on market sold really quickly and sent really encouraging signals to everyone, thinking that it was going to be a very good year and everything was going to kind of go back to normal. So what happened is in Toronto, most people are conditioned to think that the spring and fall market are the strongest markets to list your properties. So given that Toronto entered into phase 2 and phase 3 during the slowest months and the market did quite well, most people said, okay, great, we're going to wait for September after Labor Day, we're going to hit fall market, everything's back to, seems to be back to normal. So what happened was the same number of sellers came to market. Almost sometimes certain days there was double and triple the amount of inventory that came on in September versus what came on last year. And that caused an increased supply in condominiums, which created a glut and caused prices to go down. Now, during this exact same period of time in the fall, all houses in pretty much every district still soared, and almost all price demographics still soared. And we saw, housing prices continue to increase. The reason for that, and I always say this on all of my calls, is that houses are, there's only finite space in the city. You can't build any more homes. So, even if there are 10 homes on the market, there's going to be 50 buyers for those 10 homes. There's never going to be a point in time where we have so many houses on the market in the city where we don't have those same amount of buyers, because we can't build Toronto any further or any more in the city. So, that's why we saw house prices grow. While with condominiums, the amount of inventory put downward pressure on prices. So traditionally, our fall market goes until about December, and at which point in time, you usually have everybody who has not sold take their properties off the market. That happened as per normal, but everybody who didn't take their properties off the market, who hadn't sold for months, all of a sudden started selling. And properties that hadn't moved, whether it be a house or a condo, started moving. And things were starting to sell really quickly again. All of my listings in December sold in a day. So, and I was able to get more money on listings that I sold 2 weeks after in December, just because the demand was there and we were starting to get traction again. So, that leads us to what's going to happen this year. What are our predictions for our real estate market? So we focus on the city of Toronto. We sell downtown. I strongly believe that our housing market will be a double-digit year. It'll be 10 to 20% growth without a doubt. There's already a ton of people waiting in the wings to wait to see what comes up. So it's already in the air. Like I can already tell it's going to be a double-digit year just based on the amount of interest and activity and lack of inventory that's going on. So what is that going to do to the condominium sector? So during this period of time, the condominium sector has been lagging and has fallen while house prices have gone up. So, the delta between the two has grown. So, and it will grow so wide that at some point people are going to realize that the only affordable option is back to condominiums. In addition to that, on the horizon, we've already been told we have a vaccine that's being rolled out. I think, realistically speaking, the vaccine won't take into effect for the entire population until about September. But that confidence in knowing there's an end in sight within itself, and knowing that, hey, I have a job still, that's going to give me the confidence to go back out into the market. That's a critical component in why I think the market will rebound. Something else is our government has already announced a very aggressive immigration policy. They want to bring in way more immigrants, and that's traditionally what has helped our real estate market really skyrocket, is our immigration. And again, the delta between condominiums and houses is really very high, and it's continuing to grow. And there is a once the city gets going again and things open up and amenities open up, it's logical, and students come back to the city, it's logical to assume that the inventory will deplete and prices will go back up. I predict that if condominium prices don't rebound fully by spring, they will by fall market, or certainly by the end of fall market, because the housing market will push the condos high. I do think that people in the cottage country and 905s, after the pandemic is done, are going to be the ones that experience the highest percentage loss. Anytime there's been a dip in our market traditionally in Toronto, it has affected the 905 areas. But I think once the city gets going again, as an example, prices for rent outside the city now are more expensive than prices to rent in the city. So, that's going to encourage people to come back, because the rental prices in the city have come down, whereas perhaps outside of the city, because of the lack of inventory and people moving out and wanting bigger spaces, it hasn't. One of the most lucrative opportunities that I was able to secure for everyone last year was an off-book discount deal that I got with a developer for doing a large number of transactions in his project. So, I was able to negotiate a really advantageous deposit structure, and we were able to get everyone a discount between $30,000 and $70,000 off the pricing, and that wound up being a good 20% cheaper than what all of our competitors were getting in other projects in similar areas. So we are working on those kinds of opportunities for the year, because for me to recommend something, we're trying to get people value on the table where we can show you that other people have paid more money already, so you should buy this for that reason. So what we have very exciting opportunities I've been working on, and we're hoping to announce those soon, but the deal hasn't been finalized yet, and pricing hasn't been finalized yet. And so until we have all of the logistics sorted out, we can't share too much. But what we're working on is an opportunity where, because of the volume of business we're going to give, that we're going to be able to offer product to you at somewhere between hopefully 15 to 25% off what neighboring projects are selling for. So if you're interested in something like that and you're not on our email list, please send me your email so that I can make sure you are in the know about those opportunities as they become available. And all of our repeat clients have first access to things like that. So we're always out there trying to provide more value and get you into things that other people don't have access to. Q3 for I think definite. It's a Q3, Q4 we're back to normal. I think even it could happen in spring. It just depends on when prices will start nudging upward. They've already happened. Like the bottom, if you were waiting for a bottom, it should have been September, October, November, because I was already getting more money in December. So it doesn't happen overnight, but each sale sets a precedent, and then the next one traditionally goes for more and more and more after that. So with rental prices, I've been getting more on my rentals than I did a few months ago. I've just been having to hold out a little longer and to a lot more time for the process. So normally where I could rent you out in 0 to 30 days, now it's something like 20 to 45 days, right? So if you give yourself a little bit more time to rent it, you'll be fine. But I think prices in itself will go up by Q3, Q4, because as people come back into the city and that inventory gets absorbed, it'll nudge prices upward. And rent control is only freeze this year. So all investors who have properties built after 2019 now no longer have rent control. And after this year, the rental freeze is done. And I think there's going to be a huge outcry from landlords who, have taken a loss on their rents and are being told to freeze them at the same time. So I think within itself, that's not going to continue on like for year after year. I don't think that will happen. I think once people get back on their feet and landlords also say like, look, I'm down 25% and I've already given my tenant a break, like I need to charge more now, like, more likely. Certain ones, yes. Certain ones, no. A developer's motivations could lie in, who do I owe money to? Who are my partners in this deal? How well funded are we? Do we have to sell this by a certain day? Do we have construction financing? Do we have our permits? So, there's a lot that goes into that. So I would say majority, we still had a healthy amount of launches. It's just that they weren't selling out in a day. And they shouldn't be selling out in a day, because right now, when the resale market just dropped, you're better off buying resale when it's gone down 10 to 20% in a month. I'd rather you buy that so you can rebound that gain by Q3 of 2021 versus let's go buy new at what we have to gain. Look, the developer has to attain a certain price to be profitable today. So, he doesn't care the markets come down. So right now, I don't think that they're necessarily holding back, but I told people, when I first started in real estate, it used to take 2 years to sell a building. Now we were selling buildings in a day, right? So that's not normal, and the sale process could be longer, right? But there are lots coming out. So if you guys have any questions, well, be sure to reach out and make sure that if you had any follow-up questions that popped in your head, that we can reach out to you either one-on-one to get you the answers that you're looking for, or to find out what you'd like to hear about next time, so that we can answer whatever questions that you guys are looking for. So thank you so much for joining me on my first webinar. I hope you got something out of it. And I look forward to hopefully seeing you again on the next one. Okay, take care. Bye.